Hi, I'm John Davis. Welcome to the webinar. Today you'll learn a simple strategy that will allow you to double your retirement income while eliminating market risk. Now, if after the webinar you have further questions or you'd like to schedule a free consultation, I can be contacted at 847-592-5405 or email me at john@johntdavis.com. So who is American United Wealth Planning? Well, we're a retirement and estate planning firm. Our mission is to make retirement and estate planning about love of family, not just about money. We're located over at 1900 on Gulf Road in Schaumburg, and we've been serving our community for over 30 years since 1982. We're also accredited by both the Better Business Bureau and the National Ethics Association. Without a doubt, our greatest gift is our spouse and family. And at American United Wealth Planning, we're all about advocating for you, your spouse, and your family. We believe that great things start with a simple conversation. So today we're starting a simple conversation about retirement income and the impact it can have on you and your spouse and family. Now, this is just the tip of the iceberg. Retirement is a lot more than just income planning. The demand for retirement planning services is growing by leaps and bounds. Now, have you asked yourself why that is? Well, the answer is really simple. People are living longer. Today, the fastest growing segment of our population are people who are living to age 100. Now, since we're all living longer, I have a question for you. What will the next 20 to 30 years of retirement look like for you? What's your vision of retirement? Where are you going to be living? Which family members will be most impacted by the planning decisions that you make today? Will that be your spouse, your children, or your grandchildren? And how will they be impacted? At American United Wealth Planning, we build My Family Shield plans. They're designed to provide answers to these really important questions. A My Family Shield plan is a written retirement and estate plan. It covers both your financial and your legal responsibilities in retirement. It's designed and based on your vision of retirement, and it's tailored to address your specific goals. What a My Family Shield plan does for you is it gives you control. Yes, it gives you control over the types of experiences that you and your family will get to enjoy in the future. It allows you to remain self-reliant and independent, and it removes the risk of being remembered as a burden, or worse, creating a burden for your family. What it really means for you is peace of mind. You can finally quit living in this gray area of wondering whether or not you and your family will get to enjoy and live your vision of retirement. Now, you'll know for certain because a My Family Shield plan tests all the critical areas of your retirement. Yes, from Social Security to income planning to legal documents, and we have a legal team to help you with the legal documents. We make sure everything works when it's needed the most. Now, this is so important that at American United Wealth Planning, we've made My Family Shield planning and advocating for you and your family the foundation of our business. So I guess if you're watching this webinar, it's because you're going to consider retiring in the next few years. So I want to start out by saying congratulations. You've been saving money in your 401ks and IRAs all your working life. You're going into retirement, and it's time for these assets to start providing you with a comfortable retirement income. So today's retirement has become sort of a good news and bad news situation. Let me explain. The good news is that due to modern medical science, we're all living longer. Yay, that's fantastic. The bad news is that now that you're retired, you're no longer having a paycheck coming in. So now your challenge is to figure out how to make your income and assets last long enough to support your lifestyle for the next 20 to 30 years of retirement. So how do you do that? How do you adjust your income for inflation to maintain and not lose your lifestyle over the next 20 to 30 years? How do you make sure that you never become poor? Well, many are being told to sell off and spend down their IRAs and 401ks by following a 22-year-old strategy called the 4% rule. But things have changed. So what I have here is a professor who can explain to you what the 4% rule is and how it works. Let's listen to him.
I'll just go over briefly what the 4% rule means, that a client could spend 4% of their initial retirement portfolio, and then every year increase that spending by the rate of inflation throughout retirement, and withdraw about 4% that first year and safely spend that same amount of money after inflation all the way up to the age of 95. It's a relatively safe assumption at the time that that article was written 22 years ago, but things have changed. So if you have $1 million and you're following the 4% rule, you'll spend $40,000 the first year, and then that'll go up by the rate of inflation. Now, if your portfolio goes down the first year, then let's say by 20%, now you have $800,000, and you have to pull, if inflation is 2.5%, you have to pull $41,000 out of that portfolio. So now you're down to $759,000. If that happens another year in a row, where your portfolio goes down by 20%, now your portfolio has fallen even further, and yet you're still taking maybe $43,000 out of that portfolio. If that happens 3 or 4 years in a row, you may be down to $300,000 or $400,000. So you're going to either have to ramp down your spending significantly, or you're going to jeopardize running out of money at some point in retirement.
Okay, he said an awful lot there. So let's take a closer look at some of the things outlined in the video. All right, for everyone, retirement starts with how much income you'll need to maintain your lifestyle after you retire. The 4% rule was developed 22 years ago by Wall Street to help you create retirement income. Now, every year, you're supposed to sell 4% of your 401ks and IRAs. The sale proceeds are used for retirement income purposes. Now, we're told that the 4% is a safe withdrawal rate and that it will be replaced as the market goes up. Now, here at American United Wealth Planning, we like the 4% rule, but we ask, why are we capping off our income at just 4%? What about inflation? What if inflation takes hold? Can we double our income? Well, as we said, the 4% rule is great. There are years when you can get more than 4%. And in fact, in some years, you can even double or triple your income. Let me show you what I'm talking about. Here, what you're looking at is a historical chart of the S&P 500 reflecting its performance from 1960 through 2018. Now, for those of you who are not familiar with the S&P 500, this is an index of 500 of the top companies in the U.S. These companies have to have over $5 billion in assets in order to be listed on the S&P 500 exchange. And even though these are strong, safe companies, if you look at the chart there in blue, it kind of looks like a mountain range. And what that is that's just the values of the stocks going up and down over time, reflecting their change in performance. Well, back to the 4% rule. You see, you could have actually doubled your income in the late 1980s. If you followed the 4% rule and the market gained 8%, the 4% that you took out and sold was replaced by the 8% market gain, and you were ahead by 4%. But really, there was no reason why you had to take out a measly 4%. You could see the market went up 8%. You could have taken out the whole 8% if you wanted to and still been fine. Now, in the 90s, you could have actually tripled your income. Let me give an example. The market went up 15%. So if you sold 4% and the market gained 15%, you replaced the 4% sold and you were ahead by 11%. But there's nothing to say that you couldn't have taken out the whole 15% and tripled your income. Okay? And you can see that following the 4% rule, that as long as the market goes up, you're okay. You can replace what you sell off and never outlive your savings. But as seen in the video, the problem is the uncertainty in the down market years. Here, the 4% rule can deplete your wealth. You see, as your securities fall in value, you actually have to sell more securities to maintain the 4% income amount that you're after. You may have to sell twice as many securities to maintain your income. And the worst part is that since you sold those securities, you no longer own the securities to earn back losses with when the market recovers. Let me show you what I'm talking about. So between 2000 and 2002, that's 2 years, the market fell 48%. If you sold 4% per year and added in the 48% stock value drop, you would have suffered a 56% loss of wealth in only 2 years. And the worst part is, since those securities are gone, there's nothing to recover with when the market comes back. And it happened again in 2007 and 2008. Here the market fell 59% in 1 year. In 1 year. If you sold 4% and added in the 59% stock value drop, that would have been a 63% loss of wealth in only 1 year. And again, the securities are gone, so there's nothing to recover with. The 4% rule is just a rule of thumb to keep you from taking out too much in the down market years. But what if there was a way to get the best of both worlds? What we're talking about here is more income in the upmarket years with automatic loss protection in the down market years so that you never deplete your wealth, so that you never deplete your savings. Well, there is a way, and it's called the Hedge Bucket Plan. So I know you want to know about the Hedge Bucket Plan, so let's take a look at that. Here's how the Hedge Bucket Plan works. Everyone has a market bucket of investments. These are your IRAs, your 401ks. And again, most of them are invested in the market. Now, with the Hedge Bucket Plan, what we do is we create additional sources of income by adding a hedge bucket of market independent assets to complement your bucket of market investments. Okay? So this is what it looks like. These are assets that follow two rules. They always produce income. They're not negatively impacted by the market no matter what the market does. So how does this work when the market's down? Everybody wants to know that. Well, when the market is down, you stop selling your market invested assets. In other words, you don't sell your IRAs. You don't sell your 401ks at a loss. You keep these assets to recover with. Remember from the last chart, when the market fell, if you sold those off, you'd have nothing to participate with in the recovery. So I know what you're thinking and I know what you're saying. Well, if I'm not getting money from selling my securities, how am I going to have income? Great question. That's where your hedge bucket comes into play. Now, instead of selling, you take your income from your hedge bucket. And remember what we said about these assets? Your hedge bucket assets always produce income and they never lose value. So that's where you get your income from. You don't sell. Okay, but what happens when the market recovers? Well, this is where you could give yourself a raise. You see, because you still have your assets that recovered in value, you can go back to selling from that bucket. Instead of capping off your withdrawal rate to just 4%, you can actually increase your income and match your upmarket gains. Based on market performance, that could be 8%, 10%, 15% or more, depending on how well the market goes up. Okay? See, with the Hedge Bucket Plan, you never sell at a loss in down markets. You only sell with gains in up markets. It's really simple. When the market's up, you maximize your income from your investments. When the market is down, you eliminate losses. You take your income from your hedge bucket. So at American United, one of the things that we do is what's called a retirement income snapshot. I mean, think about this. How do you know if you need a hedge bucket plan? How do you know if your income will be enough to support your lifestyle over the next 20 to 30 years? Well, the only way to be 100% certain is with a retirement income snapshot. At the end of today's webinar, you'll have the opportunity to schedule an appointment to meet with us. What you're going to get when we meet is a retirement income snapshot at no cost to you. So the question you might be asking is, what is an income for life snapshot and what does it do? Well, what it is, it's a snapshot and a review of all your retirement income sources. It's fantastic because you get to see everything listed on one page, making it a retirement plan all in itself. What it does for you is it tests all of your retirement income sources to make sure that they'll last as long as you need them to last for both you and your spouse. What it really means for you is that you can quit wondering. You can quit wondering finally if you can afford to retire, whether or not you're going to have the retirement income you need to maintain your present lifestyle and avoid outliving your money in retirement. Now, for a lot of people who come to our office, this is their one single greatest concern. What you'll know is that we've mathematically tested all of your income sources for you. You'll see all of your retirement income sources and income totals listed on one page. You'll know that your income sources will create enough income and that they'll last for as long as you need them to last. Here's a picture of an actual report. What you're going to do is you're going to bring me your basic information. We're going to plug this into the software. We're going to do the computations and we're going to provide you with the plan. I'll send a copy over to you. It's just that simple. You'll have a plan, an income plan, retirement income plan within a plan. Now, what this really means for you is peace of mind with proven retirement income. You'll be able to put your income concerns behind you and it won't cost you a dime. Now imagine this, imagine a stress-free retirement where the focus is on doing the things that you look forward to doing, spending time with your family and enjoying life. Imagine what that'll look like. Remember that while money is important, life is not just about money. It's about the quality of life and time that you get to spend and enjoy with your family. So maybe you feel an ethical responsibility to plan your retirement for the sake of your spouse and family. Maybe you just want a second opinion on the great things you're already doing and simply want to know where you stand. You'll know for certain with a free retirement income snapshot. While 20 to 30 years of retirement is a long time, the good news is that I'm here to help. I donate an hour of my time just to answer questions. Now, just below your screen, you can download a retirement success information kit. The first page has a link to our website contact page. Just pick a time and day to meet, and I'll get back to you with the details. Again, if after the workshop or after this workshop and presentation you have questions, look below your screen and you'll find that you can download an information kit. And if you have questions, call me. I can be contacted at 847-592-5405 or email me at john@johntdavis.com. I look forward to meeting with you. Take care.